Why are billionaires buying this asset? And what do they know that the average investor doesn't? Throughout history, the world's wealthiest individuals have consistently positioned themselves ahead of major economic shifts by identifying opportunities before they become obvious to everyone else. While headlines often focus on stocks, cryptocurrencies, and luxury investments, many billionaires are quietly increasing their holdings in assets they believe will preserve and grow wealth over the long term. The reason is simple. Wealthy investors understand that true wealth is built not by following trends, but by recognizing value before the crowd arrives. When billionaires allocate billions of dollars into a particular asset, they are not acting on emotion or social media hype. Instead, they rely on extensive research, economic forecasts, market analysis, and teams of experts who study global trends. One of the key reasons billionaires buy certain assets is protection against inflation. Inflation gradually reduces the purchasing power of money, meaning that cash sitting in a bank account loses value over time. Wealthy investors seek assets that can maintain or increase their value even as prices rise. Another reason is scarcity. Assets that are limited in supply often become more valuable as demand increases. Whether it is prime real estate, valuable companies, strategic resources, or innovative technologies, scarcity creates long-term opportunities for wealth accumulation. Billionaires also think differently about risk. While the average person may focus on short-term market fluctuations, wealthy investors often look decades into the future. They understand that temporary volatility can create opportunities to acquire valuable assets at discounted prices. This long-term perspective allows them to remain calm during market downturns while others panic and sell. Another factor driving billionaire investment decisions is global economic change. The world is constantly evolving through technological innovation, demographic shifts, artificial intelligence, renewable energy, infrastructure development, and changing consumer behavior. Billionaires study these trends closely because they understand that future wealth is often created by investing in sectors that will dominate tomorrow's economy rather than today's. For example, many successful investors have generated enormous returns by identifying transformational industries before they became mainstream. They recognize that the biggest gains often come from being early rather than being perfect. Wealthy investors also prioritize assets that generate cash flow. An asset that produces income can continue creating wealth regardless of market conditions. This is why many billionaires favor investments that provide recurring revenue, dividends, rental income, or ownership stakes in profitable businesses. Cash-generating assets provide both financial stability and opportunities for reinvestment, creating a powerful cycle of wealth growth over time. Diversification is another important principle. Billionaires rarely place all their money into a single investment. Instead, they spread capital across multiple asset classes to reduce risk while maintaining exposure to growth opportunities. This strategy helps protect wealth during economic uncertainty while allowing participation in emerging trends. In addition, wealthy investors understand the importance of patience. Many of the greatest fortunes in history were not built overnight. They were built through years or decades of disciplined investing, strategic decision-making, and the ability to ignore short-term distractions. Billionaires often buy assets when public interest is low because they know that the best opportunities frequently appear when others are fearful or uninterested. Another major advantage billionaires possess is access to information and networks. They often learn about opportunities before they become widely known, allowing them to make informed decisions based on deeper insights. However, the underlying principles behind their success are not exclusive to the ultra-rich. Ordinary investors can benefit by focusing on long-term thinking, continuous learning, risk management, and disciplined investing. The most important lesson is that billionaires do not chase assets simply because they are popular. They invest based on fundamentals, future potential, and the likelihood that an asset will remain valuable over time. They seek opportunities where the reward significantly outweighs the risk and where long-term trends support continued growth. Whether the asset is real estate, technology companies, infrastructure projects, natural resources, or another emerging opportunity, the mindset remains the same. Wealth is built by identifying value, maintaining patience, and allowing time to work in your favor. Ultimately, the question is not just why billionaires are buying this asset. The real question is what principles are guiding their decisions and how those principles can be applied by anyone seeking financial success. By understanding how the world's wealthiest investors think, individuals can make more informed financial choices, avoid emotional decision-making, and focus on building sustainable wealth over the long term. The greatest investment advantage is not access to billions of dollars, but the ability to think strategically, act rationally, and remain committed to a long-term vision even when others are distracted by short-term noise.